Hey guys, this is Adam from Dodjits.com and this is your video briefing for Thursday the 22nd of October 2009. Now what I want to do in this video is I want to again talk about psychological levels, and I want to show you something that happened during yesterday's stock session. Now what I'm doing at the moment is I'm looking at the Dow Jones Industrial Average, and this is basically a 5-minute chart. So what we're looking at is the whole of yesterday's intraday session. Now look, we jumped up at the start of the session, we can see that here, and then basically what we were doing, we were trading in this type of, I don't know, you could call it maybe a range or a minor downtrend like that. And look what happened towards the last hour of the session. Number one, we completely dropped lower. We dropped below the 10,000 mark, which was our psychological level. We really dropped, and we closed the session at 9,947. Now obviously yesterday there was a downgrade, so it wasn't good for stocks, and the financial sector all dropped, and then it caused basically an intraday avalanche, and the major indices just basically tipped over throughout the session. But what I want to do is let's flip over for a second to a daily chart. What I want to do is just show you that normally it really depends. Each time it's going to be due to a different reason, results, earnings, economic data. But normally around psychological level, like the 10,000 mark or like the 1.5 level on the euro, we're going to just show you in a second. Normally around those type of levels, round numbers, they're going to normally act as a psychological level. And basically what's going to happen is traders or investors tend to get a little bit skeptic around those areas, and then what they start to do is they either start to take profits after a nice rally like this, we're looking at a daily chart, or what happens is the market starts to consolidate a little bit around that area before breaking up higher. And the reason for that is because there are a lot of bulls, a lot of bearish traders out there that don't know exactly what's going on, if the market's going to head higher, especially we're now in earnings season, so you know every report that's coming out is just moving the markets from side to side. We're going to have to see how this plays out. I just want to mention one last thing as well. We've had this massive rally higher, and momentum is starting now to die down. We just zoom out a little bit, we can see we've got this trend line going up like that, and we've got another one going roughly like that. So basically at the moment we are at our upper trend line, which is also a resistance level. Like I mentioned in the previous video, I am expecting a slight retracement to the 9847. I think that's the same number I stated last time. We're going to have to see how this plays out. I don't expect anything major. We are still in this massive bullish trend going higher. Again, according to what we're working at the moment, is that every pullback is just an opportunity to take the indices higher. Now, before I flip over to a few different Forex charts, I just want to show you crude oil. Crude oil has made a massive rally. This has been absolutely perfect because we did have this bullish triangle pattern going on roughly like that. We also mentioned this trade on the website, and for those of you that are in the trade at the moment, just remember to move your stops. A stop could be, a possible stop area could be below this massive green candle at the moment, roughly around here. So, you know, this trade does look good at the moment. It's continuing higher. The angle also of the trade is very steep, so there's still a lot of momentum in the trade. Let's see how it plays out. I think this is going to start to even out a little bit. We might even start to go a little bit sideways due to, again, psychological resistance of the 80 level. If you are in the trade, you should have your stops, so you've got nothing to worry about. Moving on to the next chart, the euro against the US dollar, you can see again what I'm basically doing is just using trend lines in these videos, and you can see that we are climbing higher. We've got this massive bullish trend going higher. I do expect a slight retracement around this area now. Again, we have touched the 1.5 level, which again should act as a psychological resistance. If you want to time your entry points or the corrections more precisely, you can use this trend line that is going higher right around here. This minor trend, or this, I would call it maybe a secondary trend, because we are in our major trend that's going higher. So obviously if we're going to break this trend line going lower, we're probably going to receive a pullback. Now what I'm going to do is I'm going to just use my Fibonacci tool just to measure the pullback. So if we do receive one, it's probably going to be roughly to around this level, roughly around here. I'm talking about our prior high, which coincides with our trend line resistance, which also coincides with our Fibonacci level. So this looks like a nice level if we do receive a pullback. The last and final chart that I want to show you guys is the US dollar against the Canadian dollar, and the reason for that is because we've got data coming out today from Canada and from the US. We've got retail sales from Canada, we've got initial jobless claims from the US. Just take into consideration these following lines. We've got major trend line resistance around here, so if we do receive a bounce higher, expect it to get stuck probably around the 1.06 level, which is also another psychological resistance. Does look like it's climbing higher. Again, I just wanted to show you this level because it does coincide again with major resistance. Hope you enjoyed the video. My name is Adam from Dodjits.com.